Kia ora, and welcome to the CoreLogic Property Market Update for July 2020. How surreal does it feel right now to be living relatively free in Aotearoa? While we relish our newfound normality, the second wave of COVID-19 pandemic in Australia's largest city, Melbourne, has served two purposes for me. One, a stern reminder of the need to remain vigilant, especially with our border control. But secondly, as a visible illustration of how lucky we are to be living our lives the way we are, with relative freedom. And the property market appears to be transacting freely as well, with June sales volumes not only matching 2019 levels, but exceeding them by 11%. This no doubt reflects the amount of carryover demand from prior months, when it was more difficult to transact. But nonetheless, to be back to normal levels after only 2 months of significantly reduced sales volumes is a major milestone. Of course, we remain cautious for what lies ahead as we approach the end of wage subsidies in September and mortgage deferrals from now, but there's no getting away from the immediate cushioning impact that the government support, Reserve Bank stimulus and bank mortgage relief has provided to the market in the short term. Of the main centres, Christchurch saw the greatest lift in sales volumes, with June's numbers 20% above the same month last year. Like much of the rest of the country, the Canterbury region suffers from a short supply of properties listed for sale, which may have even held back the number of deals that could be done. And from a value perspective, it could also limit decreases as demand for property is yet to be significantly impacted, meaning the supply-demand balance hasn't tipped towards the supply side as yet. Bucking the positive trend for sales volumes were Hamilton and Tauranga, down 7% and 11% respectively. And in Tauranga's case, this is actually reflective of the pre-COVID situation anyway, as volumes have been slowing for the best part of the last 15 months. Affordability and perhaps greater uncertainty amongst the more active type of buyers here, namely movers, may have resulted in more hand-sitting in the beautiful Bay of Plenty harbourside city. The number of new listings coming to market has also been a key marker of market health, and the CoreLogic lead indicator of appraisals generated by agents foreshadowed the return to mostly seasonal normality here. But one thing we couldn't get from those measures was the sentiment of why people were listing. A quick survey of those agents revealed the motivation of some were tilted towards the negative, with 19% of agents reporting that vendors were selling due to financial distress, with a further 10% citing a vacant rental property as their main reason. Meanwhile, 16% stated a fear of falling prices as their main motivator, which could also indicate financial concerns, as owners with decent equity should be able to ride out a short period of value decline, as many have projected. Evidence of this group of motivated sellers may go some way to explaining the drop in value witnessed between the first and second quarters of the year, tidally split by the onset of COVID-19 pandemic at the end of Q1. According to the quarterly house price index we produce, nationwide values dropped negative 1.5% in the June quarter. Of the main centres, Auckland and Dunedin saw the greatest falls over the period, at 2.4% and 2.5% respectively, while Tauranga once again went against the grain with a 1.3% lift in the quarter. More financially secure and therefore less motivated sellers will likely have reduced the number of underperforming sales, which would lead to falling values more broadly. It should be noted the most recent sales are showing signs of the drop being short-lived. However, as mentioned earlier, we're wary of the potential for greater pain heading into spring. Speaking of, that's a time which is rapidly approaching, especially when measured by the upcoming general election date of September 19. The political landscape is certainly providing plenty of intrigue, with yet another change at the top for National creating yet more uncertainty about what this election will serve up. At this stage, the economy will likely be the centre of much campaigning, which the property market is interlinked with. But for any direct housing policy influence, we're likely relying on the minor parties for anything resembling a shift change. This might reduce the uncertainty that an election can otherwise bring when a major party has a hard line on housing, such as a capital gains tax reform. Speaking of the economy, the newly created New Zealand Activity Index is providing us an earlier view of the recovery from COVID-enforced lockdown, with May activity bouncing back to finish only 6.5% down on the prior year, after April's activity fell 19% year on year. June's figures could well be back to parity, though we know the makeup of that activity will be very different, with international tourism still on hold. Meanwhile, from a migration perspective, May's arrivals data shows the huge drop in arrivals to New Zealand as strict border controls remain in place. Stats New Zealand reported that May 2020 saw the lowest number of arrivals since 1959. The majority of arrivals in May 2020 were New Zealand citizens, and there's been a total of 47,400 New Zealand citizens come home since the 19th of March. With fewer Kiwis also leaving the country, this will provide a level of property demand, be that owner-occupied or rental, thus reducing the impact of the drop in other arrivals and increase in migrant departures. The rental market has also been one of great intrigue, and the latest figures from MB showed that property rental growth slowed from 5.5% in May to 4.8% in June. If the GFC is anything to go by, rental growth will slow further in the months ahead. With capital gains also likely restricted over the short to medium term, this could impact investor activity, so is one to watch how it evolves. For now though, confidence in the market and economy appears to have returned. According to the preliminary July business confidence results from ANZ, many of the sub-indices are now back within the ranges that prevailed in 2019. Yet another return to normal, perhaps surprisingly so. So much to take in, so much to track. Make sure you're always kept in the loop by checking out and subscribing to the CoreLogic Property Market Podcast and all good podcast players. And bookmark the research tab at corelogic.co.nz, where we regularly publish all our insights. Mā te wā.